Yen. Election risks in BOJ path, Commerzbank.
Ripple price forecast. XRP exposed to volatility amid low retail interest, modest fund inflows.
Slovenia inflation eases to 2.6% in January. Dollar rebounds on Warsh-led gains. Gold stabilizes near $5,000 on weaker dollar and supportive fundamentals.
Euro-yen steadies after election-led volatility in the yen. Euro, ECB steady as inflation undershoots, Danske Bank.
U.S. dollar slammed lower, even as data shows the shorts piling in. U.S. forces board Venezuela-linked oil tanker in Indian Ocean without incident.
Bank of France Governor Villeroy announces surprise resignation.
U.S. dollar diversification and hedging reshape flows, Rabobank.
Portugal trade gap narrows. In December, IMF's Georgieva don't see change in role of dollar anytime soon.
Canada, food prices and tariffs shape outlook. RBC Economics. Yeah. Let's go. Markets are opening. Let's go. What you gonna do? Risk on, risk off, baby. Fill out the form. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I think I grew since last week, huh? Let's see. What's right here? No. No. Better? Yeah, I guess that's a little better. Hey, good to see you. Welcome to my home office. So, this is our opportunity to get together and check out the markets. Make sure you align your trading with what's actually happening in the world, technically, fundamentally, but we also want to start with sentiment. Get a feel for what's going on. Are you paying attention to Japanese politics? No. Are you paying attention to Chinese regulations of their bank holdings? No. What about the French, was it the French Minister of Finance or the French Central Bank president just quit? Starmer's in trouble politically. Do these things matter? Yeah, you know what they do. So we got a lot to do today. Fasten your seat belts. Put your trade tables in an upright position. Let's go! Canada, food prices and tariffs shape outlook, RBC Economics. U.S. dollar, diversification and hedging reshape flows, Rabobank.
IMF's Georgieva. Don't see change in role of dollar anytime soon. Portugal trade gap narrows. In December, Bank of France Governor Villeroy announces surprise resignation.
Yen, election risks in BOJ path, Commerzbank.
Ripple price forecast. XRP exposed to volatility amid low retail interest, modest fund inflows.
Slovenia inflation eases to 2.6% in January. Good job, Slovenia. Yep. Better than Slovakian CPI, huh? Good job, Slovenia. Beautiful country, Slovenia. Beautiful people. I have several friends from Slovenia. Good job to them. So there's our, this is our Squawk Box, by the way. It's free. You can get similar Squawk Boxes that cost you, I don't know, $100 a month. This is free, part of TRADARS. Great. Ooh, look at that. We hit the daily target already for euro dollar. So you're already too late. We already hit, but we're projected to go probably R3. But you got to say, even though it's Monday morning, looks like we're well on the move to our swing trade. Cool. Let's take a look at our risk radar. Things were quite bad. Okay, this is off, just so you know. We're updating all of the 30-day, but it looks like most of the 1 day and 7 days are accurate right now, and we're updating the last part. So what you want to do is look at +4 for right now, -7 over the last week. So yeah, that's pretty fair. That's pretty fair where we are. Just slightly bearish. Hey, we were way bearish before. Yeah. So what's the answer here? What are you trading today? Risk off or risk on? I don't think a score like that justifies one or the other. I think maybe our short term is slowly overriding our long term or medium term. Next spike event is mild. You don't have to worry about the Eurozone Euro jobs. Like the best you could hope for is less than 10 pips on Euro Yen. Really? If it beats, it goes up a little bit, but barely in a reliable way, meaning 40% of the time it didn't go up, it went down. So that's neither here nor there. If it comes out as expected, it always doesn't do much. It always doesn't do much. And coming out as expected only happened 25% of the time. If it misses, cool. Goes up about 10 pips, and it did that once. Only 13% of the recent history. So really, not really worth a lot. You know, sometimes it does all right, sometimes it doesn't. Like that's the best move, huh? That's it. So nothing to worry about. I mean, we got news this week. Maybe the Wednesday non-farm payrolls. Yeah. So on Friday I did the non-farm payrolls, and so now we're going to set it up. So at FX Street we'll do the actual non-farm payrolls, which is not the first Friday, but what, the second or third Wednesday of the month. Hey, life is complicated. Yeah. So hopefully I'll see you for the actual trade non-farm payrolls live. What do you think? Smell like a plant? All right, so not a lot of news until Wednesday. Yeah. I'm working on this bug like crazy. It's doing the analysis appropriately, but we have a front end bug. I was just working on it even just minutes ago. And okay, that's an old version. Maybe I didn't. There we go. So here we are. CAD, USD CAD very bullish. USD Swiss franc bullish. USD yen neutral. Pound dollar bearish. Euro dollar very bearish. Aussie dollar very bearish. Now I'm surprised about the Aussie dollar one. And Kiwi dollar very bearish. Okay, so this is functioning. But when I expand to do the 3 time frame analysis, it opens, this works, and then it starts flickering. Wait for it. It's not flickering. Oh my God. So it started flickering, and I found out why, because it was updating the price every 1 second. And I'm like, well, we don't really need it updated every 1 second. And every time it updated, it would refresh. And so it would get in this refreshing loop. So looks like it's working. Oh, hell's bells. So now this is why we could see US dollar is strong versus the Canadian dollar. Now at TRADARS, we already went through this whole process in great detail, and we already know CAD is weak, and we looked at the commitment of traders report. We saw the capital stock and capital flows for Canadian dollar, so we know what's up. We know what's up. So that's not surprising. Now I'm very interested. Like, really, Aussie dollar is very bearish. It's not bearish or neutral because Aussie was stronger. So I'd like to see why. So again, here's what you want to do. Boom, 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 boom. Dollar strong. Okay, great. And then you can check out the why. There it is. And now we can go to USD Swiss franc. Notice that one of the changes I made recently is if one of the time frames has a very flat slope, even if it's positive or negative slope, if it's just barely positive or negative, printed as gray, basically. So what we can see here is the short-term trend right here, what I call the scalp trade, is flat for USD Swiss franc. So there's no real scalp for you. Then you add on to that short-term trend. So it's flat to up. So you probably want to observe it trending from flat to up. You probably want to watch for a positive slope. And that's the longer one. So you could just trade this. Okay, so now we have three different trading styles based on statistical analysis at 3 different times. I think it's very helpful. Now let's go through charts quickly. Okay, yeah, up, up, and then down. Yeah, you can see, probably want to sell a rip. That's great. So that I agree with that too. That is bearish. Down, down, and more down. Okay, that seems bearish. And this is the one I was interested in. Okay, so Aussie has a flat trend. So right off the bat, that's not amazing. So I don't know why he's saying very bearish. I'll probably have to have a conversation with him and say, to be very bearish, you probably need 3 time frames being bearish, not 2. So that's very bearish, but the high time frame's neutral. So I'd say, well, I don't know. I don't think I gave him that rule. So I'll have to teach him that. Say, well, you can't be very bearish unless you have 3 time frames lined up. Come on. And then let's look at Kiwi. And okay, that looks very bearish. Long term down, medium term down, short term down. Selling lower highs, selling rips. That makes sense, right? Now, for you to do this, it should just take seconds and no big deal, right? It took me way longer to talk over it than you could just eyeball it. I like trading baskets based on macroeconomics. So my favorite is sell the dollar across the board or buy the dollar across the board. So I'm looking for congruency, right? And same thing with the yen. I love to sell all the yens, or I like to buy all the yens. Never do I pick and choose. So I'm looking here and I see Swissy is just as strong as yen or weak. Dollar is just as strong or weak. And these are down, 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 and down. Boo! Because I'd rather be long than short. Okay, we can eyeball this. What about Swissy? Okay, not bullish. I think we could agree on that, huh? Not bullish. Good to know. Not bullish. And this one I'm interested. You could be bullish, but not until the short term turns green. Now, why do I say that? Because the long term is up and you want to buy a dip and you want to buy one standard deviation below the positive mean. And so now you need confirmation that the short term, the scalp, goes from a negative slope to a neutral slope. And that might be enough for you to get serious and then look this up on your chart, or wait for it to statistically become bullish and then drop into a small time frame and buy a dip and hang on for dear life. But the fact that we can just burn through three time frames on one chart like that, super time saver. You can make more money, but you can't make more time. And that does not look bullish. But I think he's oversimplifying things. He's not looking at gray, red, red. He's just looking at, on the long run, the slope is negative 0.00001. He's like, bearish, but I told him to color based on a little more of a judgment, like, that's pretty close to zero, don't you think? And so if I need to teach him and say, well, update that in your technical bias, because this, or statistical bias, and say negative 0.00001 could be interpreted as flat. So go with the colors, right? Flat, bear, bear. Yeah. But I haven't seen in a while. Maybe we can see it here. See, like, is that flat? Is that neutral? I would say this is actually more bullish than neutral. So I got to teach them. Because the long term is up. So how could it be neutral? You're like, well, the middle time period is flat and the short time period's red. But yeah, we want to see a buy a dip if you're a bull. So I lean this to modestly bullish, right? Yeah. All right, cool. What do you think about crypto? Very bearish, 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 very bearish. What do you think about that? Definitely some congruency there, huh? Bitcoin, yep. Ethereum, yep. Ripple, yep. Cardano, yep. Hey, where's my curve? There's supposed to be curve in there. The Dow, check that out. We hit 50K and hesitated. So now what? Buy a dip? It's possible, but it ain't happening right this second. It's not plotting the scalp. Oh! I thought maybe that the bug was back. Day trade looks like a swing trade. Swing trade. So he's messed that up. He's drawing the same thing twice. So, okay, that's interesting. I'm shocked that it's even a bug that could happen. Why would this toggle be different than the other toggles? Interesting. Well, learn something new every day. But can you see how you can eyeball the market really quickly? Flat, slightly bearish, slightly bearish. So yeah, I'd call that bearish, not very bearish. So I'll update him. It's the same issue. Long term is flat, but it's technically or statistically bearish, but by such a minuscule level that we should just say flat. Cool. I'll teach him that. What do you guys think about gold? Wow, look at the standard deviation on this sucker. It's huge. Huge. We've had a lot of volatility. Therefore, the range is very wide. It is statistically bearish. Yeah, it's statistically bearish, that's for sure, with lots of vol. Silver back to 80. So one of the things you should do, just so you know, it's a Monday. You need to go through your commitment to trader report. I've already done it. Okay, we cover currencies, crypto, indices, commodities, bonds. We get it directly from the Commodity Futures Trading Commission. To get crypto and stock indices and commodities and bonds and Forex, we have to pull multiple reports that have different formats and be able to pull that in, analyze the capital stock and capital flow. And so, money is definitely coming out of the Great British Pound. Oh, is it weak today? Well, hell's bells. Yep. Now, money is showing that has as if it's gone into yen, which may or may not be true. It is true. But this is the Friday report. The cutoff date for the data is Friday night, Friday at 5 at rollover. Tuesday on rollover, and then it's released Friday around 4. All right, cool. What does this mean? Well, we had a general election. We had an election, we'll say, a Senate election, upper house election. In Japan, it was a snap election called by the new prime minister. And so there could have been some, let's say, hedging or profit taking. Like this isn't tracking hedging. So I can't tell you that that's a sign of hedging, but for whatever reason, which is not usual for this time of year, what we call seasonality, but we did see a move into Japanese yen. Then we've had our elections, and I would suspect, I may be wrong, but I would suspect that flows would be out of yen. And so we got to pay attention to that. And you might want to do some yield curve analysis on Japanese government bonds, otherwise known as JGB. Yeah. Our yield curve had changed quite a bit over the last 30 days and is now kind of moving back toward the average. So there's been a lot of flows in, but there was a time when there was a lot of flows out, and it was widening and steepening and then narrowing and flattening. And there's a lot going on in the U.S. Treasury market. And there was news this weekend about Chinese bank regulators putting some heat on these Chinese banks about holding too much U.S. government treasuries. So one of the things you want to be watching over the next, let's say, month is a change in flow in or out of U.S. government treasuries, widening between the yields, like the 210 spread, a change over the 30-day period of maybe this going up or this going down, this going up, this going down. And then, of course, the general shape. So you want to look at the absolute, the relative, and then the full duration of the shape of the yield curve. Is money going into the short end or the long end or the middle? And, interest rates going up on the high end is going to raise like mortgage rates, for example. And so normally this is just our analysis of Fed monetary policy, which is a Fed analysis of macroeconomics, usually lead you to decide, do you want to invest in the long term or the long end of the curve or the short end of the curve? But now we have, on top of that, foreign holdings and purchases of these treasuries. Now, you're like, well, Wayne, I'm just a Forex trader. Well, you need to understand everything I just said had to do with the current and future value of the US dollar. So if you're just a Forex trader and you don't understand the global treasury market, which is 10 times bigger than the stock market, maybe 100 times bigger than the stock market, then you don't get it. And my friend, you should get it. I hope you get it. I get it. I got it. I know it's good. My rhymes are tight. You wish you could. So, looking at euro dollar, we're bullish, and the charts are set up as bullish. You would have had all this information many, many, many hours ago, and we've just hit the daily target. So that one is done and dusted as far as probability. And you're like, wait, what? Yeah, well, where were you 5, 6, 7, 8 hours ago, 9 hours ago? So now that we're at the beginning of the New York session, you should understand this is already done. All of this gets set up in the Asian or European market. What we call the Asian fade is a classic example of what I've been doing for decades. So it's like, what should you be doing now? You should be planning Tuesday. You should look at open your charts now and not look for something to do today. Look at the price action from today and say, well, every bullish move has a bearish pullback, because the whole idea of being a trader is recognizing euro dollar is up and then buying a dip. Well, a dip hasn't really occurred in the last 1 or 2 hours. In fact, we're at a point where it probably will. But what you should be thinking about is, okay, if price pulls back, I'll just make up a number here, to 1850. Then I'm interested in perhaps buying at that level. And it'll probably won't happen till Asia Open around 8 p.m. Eastern Time, or London Open. And for me, I usually like London Open's at 3 a.m. my time. But usually if you're going to trade the London session, you're in a couple of hours before that. Sort of the, well, you could say Frankfurt, but you could also say the Middle East Open, or is it Moscow Open? Who's moving these currencies? Yeah. Or maybe it's Asia closed. But, usually, I would say usually if you're entering your trades in London, even then, like London Open, like 3 a.m. or like 4 a.m., I rarely do that anymore. That was something I used to do a lot, in particular, even way back when I lived in California. But which has been close to 20 years. But that I used to do that then. I'm up at 4:30 usually, and we're already approaching late morning in London at that point. And then I work out, I meditate, I shower, I get ready for the day. I'm down at my desk at 5:30, and we're already running into London lunch. So that's why, like, if you live in the eastern part of the United States, or I guess anywhere in the United States, it'd be great in California, where you could plan your trades and enter your trades in, you know, like I said, Asia open. You want to catch an Asian fade. And all that means is it, it was up today, fades in Asia, and then we take it north. So by the time you log into New York, you log into this live stream, I would tell you statistically and probably you're done already. Monday is done. Now, it could go higher, that's true. But if you're going to do probability, and that's really what pivot points are doing here, we're looking at what happened on Friday. And we're looking at the volatility, the range. Okay. And there's an implied volatility based on the past range. So based on recent implied volatility, most of what you could expect based on factual data as far as price action for today, Monday, has been achieved. This is why I love swing trading, because you got to put that into context. Because I know, since I'm a swing trader. Where's my drawing? I mean, all of this data you have to put into context. Oops. There it is. Where in context, this is what I'm thinking. So that's sort of like Monday, Tuesday, and Wednesday. So that's the bare minimum of what a swing trade would be. A couple of days. Now, I prefer to be in a swing trade for a couple of weeks, but it all has to start somewhere, right? So if you can't do 2 days, you're not going to do 2 weeks. So that's my thinking process. So I look at this and I'm like, okay, well, in the next 12 hours, I would like to buy a dip in euro dollar. If you're like, well, if that's most important, why don't we just get to the heart of the matter and plan our swing trade? Oh, for sure. It's not loading properly. Not loading properly. Let me ask him. I'll have him take a look at that. Should be able to update it. But the logic here, like USD CAD, this one looks perfect, right? So, what's the logic? Well, this is the month of February. This is a 4-hour chart going back even back into January. Okay, so let's draw a vertical line. So right here is February, right? So when we were here, the trade plan was to sell here. Okay, we're bearish and aggressive. There's no doubt about it. 4-hour candles, monthly pivot points. So we're, what, a week and a half into the month? So our trade plan for the month of February is very simple. That's it. There's nothing bullish on this chart. There's nothing. And, if you're like, well, Wayne, if you put enough lines there, they all work. No. You have to understand pivot points. As an example, the only pivot points shown on this chart as of this date right here, okay, this period right here, since that time frame, it said this is our sell zone, okay, and this is our target. So you have to understand that. That's just that. That's what this says. This has been our swing trade for a week and a half. So what you should be watching for now, and in particular on smaller time frames, when you get to the red zone, you get to the moving averages. On the smaller time frames, you are looking for lower highs and lower lows and lower highs and lower lows and lower highs, lower lows and lower highs and lower lows and lower highs and lower lows and lower highs and lower low. Oh, maybe start thinking about taking some profit. Projected near the end of the month, probably around the 23rd. So these are price and time, and this is primarily technical analysis. Primarily technical analysis. So none of it's like, oh, well, this is Wayne's opinion. Well, that might be true, but you need to know how to read this chart, and you should have been ready for this. Now, things might change on the short run, or are changing on the short run, and if they do, you will see this update. But it has to, it has to be real. Mm-hmm. So when we're done, this this recording will appear here inside of TRADARS. In 20 hours, we got the next one, Tuesday, inside of TRADARS. That's where we do deeper dives and deeper analysis.
Kiwi dollar, US dollar supported by US dollar weakness amid mixed New Zealand data. Gold, debasement fears and retail demand, TD Securities. Euro, ECB steady as euro to pound upside flagged, HSBC.
Luxembourg inflation eases to 13-month low.
11.8, a newly revealed global brokerage brand.
Euro US dollar price forecast. Bulls hold control above key SMAs. 1-2000 in focus.
U.S. forces board Venezuela-linked oil tanker in Indian Ocean without incident.
Gold price is steady above 5K. Silver surges after Whipsaw Week. Whipsaw Week! Cool. So it's a nice week. Remember, the biggest thing is non-farm payrolls on Wednesday. I will do that at FX Street again. And what else? Watch Treasury yields. That's a doozy. Once again, China has been, Chinese regulators have actually informed Chinese banks not to dump U.S. Treasuries, but that there's additional undue or maybe unwanted risk around U.S. Treasuries, that we may expect volatility in the short run and longer run, and that like Silicon Valley Bank, we all know that can cause banking problems, and so maybe it could lead to, you don't really want to early sell your treasuries because you'll take a loss. You'd only have to do that if you ran into redemptions and other types of liquidity issues. If they can hang on, they could just roll off those treasuries as they mature and just not renew them. But we do want to say, well, what if some of the regulators did this to the banks because those banks are in trouble, and maybe there will be forced selling at huge losses? Well, then we're going to notice this in our yield curve analysis. Or if China just simply stops buying new stuff, right? Whatever. We just got to pay attention, because all this impacts the U.S. dollar. Because if China is not going to buy U.S. treasuries, well, then that's one less buyer of U.S. dollar, because you need U.S. dollars to buy U.S. treasuries. But I believe the UK is stepping up purchases, even Canada. They're like, Canada says, oh my God, Trump's a nutcase. I need to buy more U.S. treasuries. Thank you, Canada. So this is why we track this stuff, huh? Because supply and demand of U.S. treasuries by foreigners, it leads to the supply and demand of the U.S. dollar by the same foreigners, because they're either buying the dollars to buy treasuries, or they sell the treasuries, get dollars, and then convert the dollars back into their home country. And once again, that we call that Forex. So, Wayne, I'm just a Forex trader. Well, if you don't know how to trade, nothing's going to save you. So we got good data over here at TRADARS. It's real pretty. Almost everything you saw today is free. So I'd like you to start using it. Pretty simple. I've already built it. I've already paid for it. You might as well use it. The price is right. And then maybe down the road, once you've had a positive experience, then you're like, you know what? I'm going to go from freemium to premium. But you can get a good look at a T-bone if you stuck your head up a steer's ass, but I'd take the butcher's word for it.